Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what really goes on behind all those spreadsheets and legal jargon. Today we're diving into a massive filing from Fidelity COVINGTON Trust, a report that frankly seems to have more funds than a piggy bank. But don't worry, we'll decode the most important parts for you, especially their financials, because let's be honest, that is where the real story is. And hey, if you love getting these insights without any fluff, make sure you subscribe and join our Discord community linked down below, where we break down more complex financial topics. Alright, so first up, we're looking at the annual shareholder report for October 2025. It covers a bunch of Fidelity's investment funds, and they've given us a lot of detail. Let's get straight into the numbers for the Fidelity International Value Factor ETF. They say it had a hypothetical $10,000 investment, and well, from the 1st of November 2024 to the 31st of October 2025, that investment would have cost you about $21. That is a pretty small fund cost, only 0.18%. So, what made this fund tick? Apparently international stocks did really well this year. Think about it, the MSCI ACWI ex-USA index, which is basically a big measure of world stocks outside the US, went up. Why? Well, they say international valuations became more attractive compared to US stocks. The US dollar weakened, and some parts of the world saw good economic growth. Europe and Japan specifically saw pretty big gains. Specifically, Europe outside of the UK did great, jumping about 29%, and Japan wasn't far behind with a 33% rise. These were the main drivers for the fund's performance. Sectors that really shone included financials, which shot up around 50%, industrials with a 30% gain, and information technology, which advanced 39%. Even materials, consumer discretionary and staples saw solid gains. But it wasn't all sunshine. The healthcare sector actually took a hit, returning about -3% and dragging the fund's performance down. This was mainly due to problems in the pharmaceuticals, biotechnology, and life sciences industries. On the stock level, the biggest winner was Barrick Mining, up a huge 81% from the materials sector. ASML Holding also did well, adding to the fund's gains, and several European banks really boosted performance like Banco Santander, Unicredit, and Societe Generale. On the flip side, the biggest loser was Novo Nordisk, down a whopping 55%. Two other stocks, CSL and Teleperformance, also hurt the fund's performance. Some material stocks like Glencore also contributed to the downside. Now let's look at the long-term picture from January 2018 through October 2025. If you had invested $10,000 back then, it would be worth about $12,813. Now for the fund itself, that is a decent return, outperforming one of the indexes it tracks, but slightly underperforming another. For the last year, the fund returned 29.41%, a really strong performance over 5 years. It averaged 16.27% annually, and since its inception, it has given investors a 6.70% annual return. Remember, past performance is not a guarantee of future results, of course. Key facts for this fund show it is managing about $291 million, holding 110 different investments, and had a portfolio turnover of 61%. Where is the money invested? Well, financials make up the biggest chunk at 25.1%. Industrials are next at 18.3%, followed by consumer discretionary and information technology, both around 9%. Healthcare is also similar in weight. Geographically, Japan is the largest holding at 22.8%, then the United States at 10.5%, and the UK and Canada are close behind. Top individual holdings include ASML holding at 2.6% of the fund, and Barrick Mining at 2.1%. Next, let's talk about the Fidelity International Multi-Factor ETF. For a $10,000 investment, the costs were about $20 or 0.18%. Similar to the last fund, international equities did well overall. Europe ex-UK saw a 15% gain, and Asia Pacific outside of Japan did exceptionally well with a 44% jump. Sectors contributing to performance included financials about 40%, industrials around 20%, and communication services also advanced. However, Novo Nordisk was a major detractor, again down 56%. Other notable detractors included Daido Trust Construction and First Service, both in real estate related businesses, and Tokyo Gas. Looking at the cumulative performance from its inception in February 2019 through October 2025, a $10,000 investment would be worth about $13,167. The 1-year return was 20.49%. 5-year return averaged 9.54%, and life of fund is 7.15%. This fund is managing around $204 million with 211 holdings and a portfolio turnover of 66%. Financials are the top sector here at 21.7%, followed by industrials at 14.6% and materials at 13.1%. Consumer staples also have a significant weighting. Geographically, Japan leads at 21.3%, followed by the UK and Canada. Top holdings include PSP Swiss Property AG and Daito Trust Construction. Now for the Fidelity International High Dividend ETF. Your fund costs for a $10,000 investment were also about $20 or 0.18%. International equities were strong again, with Europe ex-UK up 25% and Japan gaining 30%. Financials were the top sector performer, up 43%, helped by the banks industry. Utilities and consumer staples also contributed positively. However, communication services fell 4% and healthcare also detracted from performance. Brookfield Renewable was a top contributor, along with HSBC Bank and ABN AMRO Bank. Glencore was the biggest detractor, down 22%. And Novo Nordisk also appeared on the detractor list again. Since its inception in January 2018, a $10,000 investment would be worth about $11,170. The 1-year return was 25.25%, 5-year return averaged 15.60%, and life of fund is 4.40%. This fund is managing around $181 million with 100 holdings and a portfolio turnover of 58%. Financials are heavily weighted here at 33.1%. Consumer staples and materials also have significant allocations. Geographically, Japan, the UK and Canada are the top 3 country exposures. Enel and National Grid PLC are among the top holdings. Moving on to the Fidelity Emerging Markets Multi-Factor ETF. Fund costs were a bit higher at $28 or 0.25% for a $10,000 investment. Emerging markets equities as a whole gained 24%. Information technology was the star sector, gaining 46%, followed by financials and communication services. But there were significant detractors too. Pharma research was the biggest, down 23%, and Xiaomi and QFIN holdings also hurt performance. Since its inception in February 2019, a $10,000 investment would be worth about $12,470. The 1-year return was 23.47%, 5-year return averaged 9.77%, and life of fund is 6.67%. This fund is managing about $258 million with 216 holdings and a portfolio turnover of 76%. Information technology is the leading sector at 23.1%, followed by financials and consumer discretionary. Geographically, China is by far the largest exposure at 32.2%, then Taiwan and South Korea. Top holdings are Taiwan Semiconductor, Manufacturing and Tencent holdings. Now for the Fidelity Fundamental Developed International ETF. This one is relatively new, starting in November 2024. For a $10,000 hypothetical investment, the costs were $58 or 0.55%. The report states that picks in developed Europe and the UK detracted from performance versus the MSCI ETH index. Security selection was a detractor, particularly in financials. The biggest stock detractor was Wolters Kluwer, down 17%. But on the bright side, an overweight in Rheinmetall, which gained 199%, was a big contributor. CaixaBank and UniCredit also helped. This fund is smaller, managing about $15 million with 104 holdings and a 41% portfolio turnover. Financials make up 27.3% of the fund, followed by industrials and information technology. Geographically, Japan, the UK and Germany are the largest exposures. Top holdings are Hitachi and SAP-S. Next, we look at Fidelity Fundamental Global ex-US ETF, also new since November 2024. The costs were $58 or 0.54% for a $10,000 investment. Picks in developed Europe and stock selection in Canada detracted from performance. Security selection was the main detractor across sectors, especially in financials. Constellation Software was the largest individual detractor. However, an overweight in Rheinmetall, up 209%, was a major positive contributor, along with CaixaBank and Rolls-Royce holdings. This fund is managing about $30 million with 155 holdings and a 49% portfolio turnover. Financials are the largest sector at 25.4%, followed by industrials and information technology. Geographically, Japan, the UK, and China are the top country exposures. Top holdings include Taiwan Semiconductor and Tencent holdings. Finally, for the Fidelity Fundamental Emerging Markets ETF, also new since November 2024. The costs were $67 or 0.60%. Stock picking in South Korea, India, Saudi Arabia, and South Africa contributed to performance. Security selection was strong overall, led by information technology. However, stock picking and overweights in Brazil and Indonesia detracted, as did selection in the United Arab Emirates. Pharma Research was a big detractor again. This is a smaller holding company, managing about $13 million with 109 holdings and a 52% turnover. Information technology is the largest sector at 29.7%, followed by financials and consumer discretionary. China is the largest country exposure at 32.2%, followed by Taiwan and South Korea. Top holdings are Taiwan Semiconductor and Tencent Holdings. Now let's talk about the audit fees. For the year ending the 31st of October 2025, the fees paid to Deloitte for these funds totaled over $1 million. For the Fidelity Emerging Markets Multi-Factor ETF, audit fees alone were $17,500, and for the Fidelity International Value Factor ETF, it was also $17,500. The report also mentions that Deloitte entities billed over $2.4 million in total for audit-related fees, tax fees, and other services for the funds in 2025. Looking at the financials for Fidelity Emerging Markets Multi-Factor ETF for the 31st of October 2025, the fund had total assets of over $261 million and net assets of over $257 million. Its net asset value per S-share was about $30.69. For the year ending the 31st of October 2025, this fund generated over $6.7 million in total income, but also had expenses of about $420,000. The net investment income was over $6.3 million. The fund had a net realized gain on investments of over $6.3 million, but a significant change in net unrealized appreciation of almost $30 million. This resulted in a substantial net increase in net assets from operations of over $42 million. The total return for this fund was 23.47% for the year. Now checking out the Fidelity International High Dividend ETF. Their statement of assets and liabilities shows total assets of over $181 million and net assets of over $181 million. The net asset value per S-share was around $24.52. For the year ending the 31st of October 2025, income was over $6 million, with expenses of about $226,000. Net investment income was nearly $5.8 million. They also had a net realized gain on investments of nearly $700,000 and a substantial change in unrealized appreciation of over $21 million. This led to a net increase in net assets from operations of over $27 million. The total return for the year was 25.25%. Let's look at Fidelity International Multi-Factor ETF. Total assets were over $207 million with net assets of over $204 million. Net asset value per S-share was about $32.94. Income was around $4.2 million with expenses just under $256,000. Net investment income was almost $4 million. They reported a really big net realized gain on investments of over $10 million and a significant unrealized appreciation of over $11 million too. This resulted in a big jump in net assets over $26 million. The total return for this fund was 20.49%. And finally, the Fidelity International Value Factor ETF. Total assets were over $297 million with net assets of over $290 million. The net asset value per S-share was about $31.63. Income was about $7.4 million with expenses around $397,000. Net investment income was over $7 million. This fund had a massive net realized gain on investments of almost $27 million, plus a significant unrealized appreciation of over $22 million. This led to a huge increase in net assets from operations of over $56 million. The total return for the year was an impressive 29.41%. Now, my take on these filings. Fidelity's funds seem to be doing quite well on average, especially with international markets performing strongly. The value factor, high dividend, and multi-factor ETFs all showing solid returns in the last year. The fundamental funds are newer, but also seem to be off to a good start, though their performance is compared to different benchmarks, so it is a bit apples to oranges. The biggest risk highlighted across several funds is the inherent volatility and uncertainty in emerging markets, which makes sense given their focus. The strong financial performance is definitely a positive, but the concentration in certain regions and sectors for some funds could be a point of concern if those areas hit a rough patch. Overall, Fidelity seems to be managing these funds effectively, leveraging international opportunities. The high turnover in some of the fundamental funds does suggest active management. which comes with its own set of costs and risks, but historically these types of strategies can pay off. The continued growth in assets from most of these funds signals investor confidence. What are your thoughts on these Fidelity funds? Do you own any of them or are considering them? Let me know in the comments below if you found this breakdown helpful. Please give this video a thumbs up and subscribe for more deep dives into corporate filings. And don't forget to check out our Discord community linked in the description for more financial content and discussions. Thanks for watching, and I'll see you in the next one.